Trading more or less high early this morning following the positive close that we got on Wall Street. Remember, Wall Street rose on a report that said that American officials were weighing the possibility of easing of tariffs from China. And on the back of that, we have the global markets that are participating now. The Nikkei is up close to around 1%. Todd, keep an eye out on the dollar yen. Now, that's the big moving factor out there. As we always say, export-oriented economy, weaker currency out there. Export-oriented economy, they'll be happy, right? So from the start of this week, we have seen that the dollar yen has moved from around 108.5 odd to around 109.5 odd. That's good news for them. That market's up close to 100%. You pull up the other couple of markets as well. The first tick was in the green. The Kospi comes up for you on the screen. The Straits as well as the Taiwanese index, all of them sitting with some gains. The Kospi, in fact, is now up close to around 0.5%. Our Taiwanese index more or less flattish to kickstart trade. Let's pull up the SGX Nifty. Let's see what that's indicating. It's been a little wobbly actually in the last few trading sessions. Crucial mark, 10,750 on the Nifty. Let's see whether or not we can get to that particular resistance level because numerous times it has been rejected. For starters though, 50 points just to kickstart trade.
All right, let's talk about the U.S. markets then. Wall Street, the U.S. markets ended higher on the back of a report that said the U.S. could ease tariffs on Chinese goods during their trade negotiations with China. The Dow closed up around 163 odd points, lifting itself out of the correction territory. The S&P 500 ended the day up 0.7%, while the Nasdaq climbed on the same levels. CNBC's Eric Shemi gets us a wrap of all the action on Wall Street.
U.S. stocks finishing higher with the Dow adding 162 points, the S&P up 19 and the Nasdaq higher by 49. Netflix reported that it added almost 9 million new users last quarter, but believe it or not, that was actually fewer new subscribers than the Wall Street analysts had been expecting. Shares of the streaming giant falling in after-hours trading on the disappointing earnings, though the stock is up 30% over the last 3 months. Meanwhile, former CBS head Les Moonves is bringing a case against his old company to binding arbitration after being denied that $120 million exit package, according to a new SEC filing by the company. Moonves resigned last year after being accused by a dozen women of misconduct. The company says the company denied Moonves' exit package after an investigation for the CBS board concluded there were just grounds for his termination. And finally, Tesla will stop its customer referral program next month. That program let customers give their friends a code, which those friends could use to get free charging for 6 months. Elon Musk said it was simple. It cost too much money. That's the action from the U.S. market. Back to you in Mumbai.
Well, let's also get in some opinion on the U.S. markets from some experts.
The U.S. economy is pretty strong. If you think about it, I'm looking at earnings this year up 6%. With dividend yields up something like 2 to 3. And, that's a pretty good market. So I think machines ran the markets before Christmas and the holidays. And I think the market sell-off was way overdone. So I think the U.S. economy continues to be pretty strong. Obviously, you got to watch exports and you got to watch the dollar. If rates stay lower, I think that favors technology stocks. The reason I like the oligopolists is they have pricing power, and I think that they will continue to do well in this market.
I think when we look at the overall market, that's a big factor. The fiscal policies that have been put in place have been very positive for the market. And the fiscal policy on trade is that as well. What makes the market nervous, of course, is it going to be done or isn't it going to be done, the headline news. So what we're seeing coming out of this is, of course, volatility. And markets are going up, markets are going down. So, but the fiscal policies have been very positive for the market and obviously for the economy.
Okay, turning attention to the European markets, they ended lower yesterday amid the heightened political uncertainty in the UK surrounding Brexit and the ongoing concerns over China slowing down. All the three frontliners ending in the red in yesterday's trading session. But let's get to the big story this morning. Finance Minister Arun Jaitley says that the agricultural sector has been facing challenges and hints at a farm relief package in the upcoming vote on account. Let's listen in to what he had to say when Shreen Ban asked him if there was a need for fiscal expansion.
In a larger context, fiscal prudence and fiscal discipline is something which gets rewarded in the larger interest of the economy. Of course, there could be unusual situations where you will have to fill the gaps in certain areas and you will have to increase the expenditure. But so far, we are now very close to completing 5 years of our first tenure, and we've stuck to that line. Now, when governments in the past have not stuck to it, we've seen the consequences of this on currency, the consequences of this on inflation, the consequences of this on investment, on the ratings, as also. And therefore, when we came to power, we inherited a fiscal deficit of about 4.5, 4.6%. And gradually, the effort has been to be on a glide path. And therefore, slowly but surely, we've been moving on that glide path, unless, of course, some unusual situation arises. For instance, last year was an unusual situation where we had the GST revenue only for 11 months, and we had to really make the expenditure for the full 12 months. And therefore, from 3.5, I intended coming down to 3.3 last year itself, but because of a 1 month absence of a tax revenue of the GST, we couldn't afford to do that. So that was an exceptional situation, which I'm sure the markets also understand. And therefore, I certainly do understand the importance. And of course, deviations are possible only if extraordinary circumstances exist. And those are extraordinary circumstances which for analysts, for global players, for domestic players are relatively easier to understand.
So when you talk about these extraordinary circumstances, would addressing the agriculture sector, would addressing the needs of the farmers today, which is being speculated about, that there is a multi-pronged package that is likely to be announced shortly, perhaps even in the vote on account. I know you can't say much on the timing of it, but is that something that would require a significant amount of allocation in terms of funding? And is that really something that the government is working towards?
Well, I really can't announce any decision sitting here thousands of kilometers away. But all I can tell you is that the farm sector, from the very data itself as it indicates, has been facing challenges. Now, the challenges are of a nature that our farmers have hugely increased productivity. And we've moved into a surplus era. Now, that surplus era and the management of that surplus is constituting a broad challenge for us for the last several years. The prices have fallen. Even today, if you look at the last few months, food prices is something which have actually gone down in India, and that reflects on the kind of money that the farmers get. And therefore, whether it's a situation like a natural calamity, or it's a situation like a drought, for instance, or it's a situation like a stress in a particular sector. Now, these are all areas which can't be considered any form of populist expenditure. Now, markets will never understand if you just act for the sake of populism. But if it is a larger interest because of a compelling situation that develops, I think that's a rational, logical thing which markets will also tend to understand.